Good morning, good morning, good morning, good morning, good morning. Friday fun day. I don't think, let me double check before I open my mouth. No, I've got nothing. A couple of orange folders, which have been volatile as of late, oddly enough. And then only one red folder next week. So quite fun. Not expecting a lot of sell-off until we take something. I'm actually expecting, based off of the 4-hour chart and what's been going on, our higher time frame, we've dealt with this area now. We had a nice sweep on our higher time frames to go back up. We've created this swing here. We failed here. In my opinion, the most likely scenario is a morning rally and then lower prices. I don't know if we'll actually take this without news, but what I'm looking at is this area that hasn't been mitigated yet. We've been selling off hard right from the gate every morning. I do expect that to kind of change, and the idea with it changing would be to get everybody interested one way and then flush them out the other. As far as our bias goes, we've got this forming, likely to take this high at 528. We're seeing the inability, at least so far, you got 10 seconds left, to put in a valid high here. We did that here, giving us our last zone. Ooh, she did it. She did it literally at the last second. Good for them. You might see a bounce out of this. I'm going to sit on my hands and wait. The morning drop and rally all week has been not a theme. Good morning, good morning, good morning. Right, and the problem with these 9:30 opens indoor areas is you look like a legend when you catch the bottom. And catching the bottom in this, trading through this, ideally trades up to this at 78 here. Right, you're looking for something like this, and then failure here will send you lower, likely underneath this, as it's already mitigated the area responsible. But I'm sitting on my hands right now. Mainly because we've actually already traded back up into there briefly. A lot of people think they're legends just by selling the open right now. And they're getting quite the payment for it. Good morning. This isn't a valid swing. By that I mean a credible swing. It's certainly an attempt to reverse the trend. But I think we would all do well to wait for some structure to form before we take anything, right? As it stands, what we're looking at right now would be something in this vicinity here. Let's get rid of this now. Right. But what I've been doing lately is I've been taking the 5 minute areas of interest as they've been holding a lot with a lot more confluence, as we have the higher time frames throwing their weight around. Getting held up nicely in this zone, this 15-minute zone here. Morning, Anthony. How do you guys find your psychology on Fridays? Do you feel exhausted from the week? From the battle? Getting a chance to review all your trades of the week and everything over the weekend? I'd be really interested to see from the prop side of things what day people have the most issues with their accounts. Morning, Jose. Yeah, exactly what I'm thinking, Yeet. Two under fives, exhausted every day. Yep. What a reason to push forward, though. But I hear you. Good. Yeah, that's awesome. There's literally nothing worse than having a phenomenal week and then pushing on a Friday and then having nothing to show for it. We're getting some violent movement here. I wouldn't be surprised if this ran now. And what I'm seeing is kind of this inability to go lower. We've now swept. If we get a body closure, then you're looking potentially trade back in to take this high that's now weak. But given the volatility, if we get that trade back in at all, it might be brief and then just run. Still no trades for me yet. Still no trades for me yet. You're noticing a significant change in personality from the last 2 days, though. Eagerness from the sell side, and yet now basing. I think a weak bear bar or a third sweep or some sort of major failure in here would really send this up. We don't really have anything credible on the bullish side yet. Lots of it being held up. I like that we traded above this. We didn't close above this bar, however. Right? So slightly unclear, but I'm certainly leaning to more upside right now. There's just a strong possibility that we get that third sweep in. Right? And ideally, my stop's underneath this 40.25. But I needed to trade above this and then by extension the 68s here. If it can't go now, I'm probably flat. There we go. Get going. Get going. There we go. And I'm down to a runner. Break even at 47s. So the idea, this failure, cool. We then trade above this candle. We're seeing failure in here, yes. Right, which leads to chop. This high is weak until when? Until we have that movement out. Cool. But what are we looking for? We're looking for the attempt to sell off and weakness. Certainly not an A+ setup, even though it hit the area that I wanted for the failure. But I wasn't interested in taking something in here given the price action, right? Significant trade back in and strength. Even with a sweep. This looks like it's going to take out my runner here. We'll see. Yep, there we go. Okay. Now what? Right, now you might argue that people were waiting for this weak high to get taken to get short. I think that a higher area of interest, which lines up probably with the midpoint of this this push, you'll notice this isn't a protected high, as this isn't a valid swing, but it's certainly significant price action that was put in from this high here. So if you're being choosy, you might have not taken any trades yet. And that's fair. Enough lines on this chart, isn't there? Let's get rid of some of these. I don't need that. And I don't really need that one. What's going on here? Whatever. There we go. A little bit clearer. Yeah. Yep, failed sharp movement down. In reality, it's coming for this low, 43.50. Took it by 2 ticks, and now away we go. Right? And this high should go pretty quick. And the reason we're expecting this high, even though we had significant price action, is we traded above this area, traded back in, and now we're leaving. This isn't part of structure. So the expectation of this area would have been almost immediately. Like finished business, gone. Right? We don't want it to chop around in here and then consolidate to expand. We're not looking to short that expansion. That's a low probability short in my opinion. Right? And I think you'll, whereabouts is it? You'll find it here. Traded back into this prior area of interest, and now explosion. Make no mistake, we are still bullish in our trend here on the 15-minute. We have 1, 2, this was the third swing down, confirmed by a valid high. Our expectation is to continue the trend until proven otherwise. And by proven otherwise, we need a body closure underneath this low. Right? So, multi-time frame analysis, we're looking for, in an uptrend, we're looking for this movement. We have the understanding that this low is put in on what? On failure. And our expectation is this high until proven otherwise. Now this was violent. Violent, as it is sometimes, especially with higher time frame zones. Right? We still haven't taken this high, I don't think. Oh, we did. We did take it by 2 ticks. Need glasses or something. Right? And now if you're looking for a sharp aggressive entry, you're looking essentially in here. If you get that retracement at all. How are we doing? Did we grab anything in here? We sitting on our hands? Taking it easy Friday? $528.75 looming. Sitting on hands till after 10? Okay. All right. Scalped long at 50s, my man. Let's get rid of this now, I suppose. So if we were to break this high here, The likely scenario is that we form an SNDR to take it. And you could argue that this is it. Right, I think it's more likely that we're just dealing with this high here that was responsible for this significant drop yesterday afternoon. Right? I still think we get a trade back down to these 60s, but if we range here, then that area would likely take this high. So we'll do something like sweeping underneath this. If that fails, then we get like a body closure here and a push up, right? You might take this high, come back in, and then go. But what I'm hoping for is a trade back down and then some failure to get long. We'll see. We'll see, we'll see, we'll see. Right, so you kind of got this manipulation leg. We took this high. This was what took out my runner. So you have like this here. Why is that not at the midpoint? That manipulation leg. That actually didn't close underneath that, did it? No, it did not. Tapping into this. I'm more interested in something in here, if I'm honest. And if you're right, you're pretty much right immediately with the idea. They're not going to give it to us. Patience. Patience. A little bit deeper of a mitigation than expected. Right, now you're looking for any sort of reaction and then continued buying from it. This is violent. Orders are speeding up. Yep. Right? The most aggressive form of buying is the location trade, right? Essentially what you're looking at is this here. Right? I wanted it in there, but it knifed through. I still think we get at minimum a trade back up to these 80s, but a sharp sell-off here definitely is curtains. And then we take this low at minimum with the possibility of taking these ones. $10 seconds. What do we get? Still involved in this, looking for at least 75. All eyes obviously on this imbalance. If this gets disrespected, then we go flying. Okay, I think I'm break even now if it comes back to 53. Didn't like that failure at the imbalance there. I think we need a sharp movement or this goes down to the lows. Right, that's exactly what the bearish calls wanted to see from PA. And now flying above that high. Wild. Wild, wild, wild. I'm down to a partial now. Great recovery. Traded up into here. Didn't quite hit the open just yet, which is actually good for bulls. I just didn't like this imbalance. I actually expected that to make a new low, and it didn't, right, which saved the position. But nevertheless, trading back up, not the price delivery I want to see. We'll see if we get some movement off of this 63 area. Yeah, exactly. That's what I'm cautious about, right? Especially on Friday, the potential of higher time frame movement, eagerness, and then this trade back in. So I'm not like in higher time frame conditions. I would be expecting and willing to hold for this. Right? This, to me, throws a real wrench into it. I still have one contract for that, but I need to see higher time frame delivery and not getting held up. Whereas typically I would expect that change in order flow and gone, and then maybe a brief trade back in. This was a little bit deeper than I expected, which is probably on me, but just throwing me off a little bit, right? People will say you don't go broke taking profits, but that's actually not really true. That's not really true. It depends on your expectancy of your system. Right? For example, if your strategy is 10 points or 10 points, and say you have a 65 or 70% win rate, and then for a week you decide that because things aren't really running to target as quickly as you'd like, that you're going to start taking, you get these pushes up, say the push goes to 6 points and then drops back down and then runs back up to 5, and you take your profit there. So you're taking half your profit there, but your losses are still running to stop. So you're actually crippling your expectancy because you're not allowing your positions to run properly. Right? And you'll find a lot of the experienced traders found a lot of their profitability really run. Now, admittingly, once your strategy is sound, when you're starting to add to your winning positions. Cut your losers aggressively, yes. Right? For example, if you're long here, like that's a poor area of getting in, right? So you're getting in at the top of this or something and expecting just a violent bounce, cool. Right? If you're wrong, you're wrong. Don't stay wrong. Because the possibility of this coming back down to here, if you're early, you're wrong as well. But what our job is to manage risk. So, beautiful. Our expectation is trade back up. A full body bear bar after touching into an imbalance. Your risk is substantial. Now you have a low probability event, not low probability, but lower probability event of this bar closing here and then the next one going on a rocket ship. And in your study, you'll probably see this happen rarely. Rarely. This bar even closed bullish, swept above it, and then what happened? We took the low. That's our expectation of this price action. Now this movement's run into the pocket of this leg, getting a movement down. We're failing above, but it's got to generate something other than touching the open of this candle. That's sort of the higher time frame delivery that we want to see. If we're looking at this, we've got a bit of a barcode going as the market decides, which is characteristic of what? An SMDR to take this high. At the top of this range, our expectation is that after taking the high, it would actually get liquidated. We'll see. Your concern if we take and close below here is that we take this low as we put in a valid movement. Now we're inside of a bit of a range here. We've closed above this candle. We've closed below our last structural one, which is actually this one. Well, you could even argue from here. Really, kind of got a range of this move. From the pocket. Valid high, valid low, nothing being broken internally. Right? But your caution is that we're trading above significant areas. We're finding a lot of selling, but it's not generating anything. Traded back down, and now another movement up. We're now looking at this high being weak, which ran this, right? Ran this, came back in, yielded nothing so far. So at best, that makes you cautious of your short positions. And what that is, it's actually something that I've been talking about a lot this week. And you'll find that narrative off of these higher time frame duels where you have violent movements down and up, is that understanding what you're expecting price to do, and if it does anything other than that, you have to at least consider that you're wrong. You have to make sure that you're looking at the person on the other side of the desk. Right? While knowing how good your hand is. Right? What do we talk about in here? Yeah, we're trading up. Yeah, we have our area of interest right here. You'd be perfectly valid to think that this could provide a strong shorting opportunity. Cool. But what do you need to see for it to go down? Whether this drops 100 points or not. If you have this and you're failing at the open of this, That low put in this high. We're not trading back to the open of this candle. Danger. Danger, danger, danger. Probably no surprise that this happened at 9:50. Everybody that looks at and loves time, that's they're all screaming about it on Twitter probably. Right? And now what we have is we have this lethargic movement that might lead to this. Right? It's bullish until it's not. But you're expecting this to lead to rejection at some point. That'll be characteristic of failure. But until then, your shorts are scalps, they're not confirmations. And that keeps you from getting wrecked by these movements that are going to take these highs. Missed by a tick so far. Now, when you guys are starting, you might see this movement and you see this attempt to reverse the trend. Doesn't create a valid swing, and yet price goes up and touches back down. This is your lower time frame movement. Right? So the expectation is to break this high at, what, 98? We tried, we failed. Ideally, this would sweep this low. Didn't quite do that. I left it by a tick. And it can be, you could have a lot of eagerness to anticipate what you think price is going to do, especially when you're starting. But if you trade failure and you trade with trend, Bang. Trade failure, trade with trend. Anybody? Anybody grab anything? Right? These are your scalps. You might not be expecting this to take this, although you could now. We've already failed above here. Came back down, that made it a weak high. At minimum, we should take this 1075. It's probably going to go pretty quick. You might get a brief trade back down to these 90s, but what you're seeing is people piling in short without cause to do so. Right? Now, you might argue, well, why am I going long here? Regardless of what this looks like. Like, sure, I could have made money, but like, what's the theory behind longing at the top of this, expecting a range? Because we're looking at this is going to lead to this. So if you're taking your base hits, cool. You're looking, your base hits by definition are objective to objective, right? You've got your lower time frame movement. Okay, you got this high, say even this one. Failure takes you back down, right? Now you're looking for failure to take you up. That low was 71.50. That low was 71.25. Now you're looking for this high, right? That's 15 points there. More than that if you held to something in here, maybe. Right? And then you're looking for some sort of failure in here. In fairness, you didn't get that failure. This low failed to put in that a high above this one. Traded back down, didn't break it. Why wasn't the 935? You talking about this one? Why wasn't that high weak after it failed to close above the 918 high? You're talking about this one? 945 high? Right, and you'd be right. Like if you look at your 15-minute chart, you've got this going on here. You have a valid structural candle here, closed underneath, right? We then traded back in. So what you have here is you have an uptrend. So by definition, until we have a body closure underneath, we expect these lows to put in new highs. Now, this one failed here, yes. We came back down, and now what we're looking for is this movement going to continue? And if it gets held up and starts coming up here, when you see lower time frame structure doing this, you might think of this high as weak because of the push away, and you'd be right. But then when you see this, that throws that narrative out the window. And you're 100% right that we would expect this to have a body closure up here instead of trading above and failing. Morning stocks. You're absolutely right in terms of this being weak, which means this low is weak. But the danger of looking at these lows and highs being weak and then not taking into account how price is reacting from that. Essentially, they're weak until they're not. And what I mean by that is that this high is weak, or sorry, this low would be weak because it failed to put in a new high. But if we trade back down and we start finding structural changes in our order flow, in other words, we're starting to see lower time frame swings occurring, this is now not weak anymore, in my opinion. Because we're expecting this weak low to get liquidated, and we're seeing this instead. Right? So this inside of a range is a scalp. You could argue it should have been a swing based off of our higher time frame order flow. By that I mean 15 minute. But we have to confirm what our narrative is based off of what price is telling us. Now what ended up happening here is you had a high, a low, a high, that broke, that traded back in and then left. So you could argue aggressive short or confirmation short for a movement back down, and you probably would have made money off of that. But until you get that protected low snapped off of your 15-minute time frame, which is your bias, we cannot take confirmation shorts, even with a weak high. And if you do, and you're holding this for a swing, say you're in at 84 or something, I wouldn't have shorted at 62. Hopefully nobody did. But we now have to look at what our narrative is telling us on the lower time frame. And that's where we know we're wrong. And that saves you the headache of holding short through this nonsense and then eventually taking that high. Right now we just missed that 528. This is actually looking a little suspect now. Yes, essentially. Right? We can form ideas, but we have to have price confirm them. And it helps to have objective rules on what we want to see so that we're not held to our cognitive bias, which is one of the three major aspects of trading psychology. We tend to get married to a specific bias. For example, going long here, we have to anticipate the possibility of being wrong, and then whereabouts are we wrong? An imbalance typically would be one of them. If we're long from in here, we don't want to see this candle violated. That's where we're wrong. So it helps, yes, trade what you see, not what you think. But you also have to be looking at the right things too. Because we see all of this. We see the long, we see the short, we see the lower time frame structure, the higher time frame structure. We have to interpret it properly as well. That's why this is one of the most challenging and rewarding industries to form a career out of. This to me is a little unclear now. That was a violent push back in. We failed above here already. That didn't generate a new low. We've now traded above here now. Bit of a barcode. Body closure on the 5 minute. Be interesting to see if we can put in a valid low and form yet another swing. Now, one of the interesting things is that if you're on the 5 minute chart, and I would encourage people to look at the 5 minute chart more often. Socio's probably going to laugh at me for this. He's been trying to get me to trade off the 5 minute for months. But you've got your 5 minute movement. Cool. You've now got a break. Trade back in. Bang. Bailey and Tom were probably all over that during the London session. And what do we have? Valid pullback here. We had a body closure underneath both of those. You could argue that our last structural candle was actually that one. Either way, you're good. You're looking at this movement. Isn't this a flip? Right? Break in structure below the 5 minute low to put it in a new high. And the reason it's not is because this is actually one of the main reasons I look at the 15 minute. That flip being fake is just mitigating our prior area of interest. That's what we need to be cautious of. So if you're ever finding these flips are fake or whatnot, have a look at the area that your 15-minute narrative is hiding under. Right into your area of interest. I'm very hesitant to take any longs right now. I want to see what this is going to do. Underneath this, fair enough. Right into the pocket, probably a decent trade to be taking for another shove up. What I don't like is the reactions that we've got after significant price movement. And now this kind of grind. We'll see. Probably scalper's paradise, but in this lower time frame grind down, with the expectation that this is a bit of a range, I tend to try and stay out of the middle unless I have something very clear of an objective that I want to reach for. In this case, it was here. So only 2 longs from me so far. Sorry, 3 longs. 3 longs. And no fun shorts. No fun shorts. Hey, what's going on, Ty? Right. If you guys did grab this long in here, you're probably looking at trading back up to this. These flat top candles provide excellent liquidity pools. And this movement up, you could argue, was snapped based off of this area here. Right there. So we'll see. See, you got your change in order flow. That low, that high, that low, broken, trade back in. Ideally, higher prices. Right? You're looking at this high at 97 at minimum, if you did take that, which is probably good for 10 to 15 points. The good news about these trades is that if you're right pretty much immediately. You don't really want it chopping around. You want them shorts covering. right? Failed underneath here, so couldn't create a valid high, at least so far. Right, but we did liquidate this area, so the bearish cause would be trading back up, and then maybe we'll get something like this, right? And supporting that theory is the inability to really create anything on the 15-minute, which tells us we could be in for a move back down. We'll see if we have to take this high and the 528 one first, but the one thing I would implore on you guys that are considering positions is you have to wait for something to be taken. Oh dear. Ooh. Can it do it? Can it do it? Bounce off of the 31-second fair value gap and VWAP confluence. Hidden gem. Or just a change in order flow. You pick. Ooh, trading back in. Scalper's paradise. The McDaddy. What is that? Isn't there like a McDonald's pattern or something? The M? Isn't that just like a head and shoulders? This actually looks a little dangerous now. Held up quite nicely. I think we take this. It's 97. Last manipulation was higher, however, but generating nothing. What I do like from the bearish side is that we've dropped down and we're really capping everything in here. But until you get a change of personality, this is going to stay range bound. Find out pretty quick. Until then, people will buy down here in the low 80s, and they'll sell up in the 90s or high 80s. If you had a 90% chance of making anywhere from 5 to 10 points, 10 times in a row, that's a strong body closure there. Decision making time. Bulls do not want major pressure away from this area, right? After this body closure, they essentially want this to have a closure above this, which validates this as an order block. Whoop. Again, looking for those 97s. This is your area of interest now, this high at 93. Not providing any resistance, so I think we're good up to here, at a minimum here. Continuation would take this high probably up to here now. Right? Bang. Right into our area of interest, cool. Does it have any sort of resistance? So, that free candlestick video number 1, we talk a little bit about the essence of it is candlestick theory and expectation. And what you'll often see with these ranges, the inability to go higher, okay, right, chopping around, doing its thing. You follow the last manipulation. So in this case, you have this lower time frame area broken here, closure there, cool. But what happens? Fails to put in a new high. So our last manipulation was this. It then goes below that low there, this one at 78, after this candle. Now, obviously the very aggressive trade is a sweep underneath here. And people did. People will buy this and sell it in here. But if we're thinking and we have an objective higher, even our lower time frame narrative objective, we have this high at 97.50 as well. We're looking for failure, right? And whereabouts people are trapped. And that's kind of the key, right? No imbalance was formed in here, cool. This candle closed here after failing. That's strong rejection. Barely sold off a few points to mitigate and then left. And now you're looking at the trade back in to this area. If this finds strength and continues, that's really not good for the bearish PA cause. Right? Because now what do we have? We have this movement, trades down. This movement broke it, trades down. Finally to our objective. Now I'm already flat because I don't really trust this. I don't really have a lot of higher time frame reason to be flat other than this push down, and I really don't like this failure. That didn't close bearish, which is something for sure. But when I have this happening on the 15-minute, my conviction in the long side is not A+. And I'd rather not hold through a potential come back down to my entry or something like that, even when it wants to run. That's what happened in here. The importance is that we're not framing every trade based off of one trade. That's psychology. Every trade is its own merit. However, there is information on the weather conditions of your day where do we have violent movements or do we have lethargic movement? And if you have lethargic movement, then you have to decide whether you want to hold through those swings back down as long as the trend holds true. Or if your strategy is scalping, then you're in, you're out, trades back down, you're in, you're out, so on and so forth. And you're taking your base hits. Many ways of making money in this market. But understanding the weather conditions that you're in, it's huge. And I think next week I might showcase some live executions of these sort of thoughts, concepts for you guys. Does that sound cool? No, certainly not. Certainly not. It's actually the reason I don't do it now. Morning, Sean. Now, based off of this, you guys can understand, even if this trade ends up going up here, given the conditions we're in, I'm not interested in this trading all the way back down to 82. If we're expecting lethargic movement, even if this trend continues, why not take 20 points? And then if you get another setup, take it again for 5, 10, 15, 20, whatever. I expect this is going to lead to some violent expansion. Excuse me. It'll lead to violent expansion. If I'm honest, my expectation is bearish. However, from the chart, we are not fully bearish yet. That was a beautiful hold of that area. And again, we're looking at the area that snapped this bullish trend, at least this lethargic one, right? Traded up, traded down, traded up again, traded down. This was the low that put in the high that snapped it. So I deem this as a significant area of interest. You guys might look at it like something like this, and you'd be right as well. That's the Wombo combo. That's the Wombo combo. Area of interest inside of your pocket. suppose I can get rid of all of these now, can't I? If we're looking for a trade back down, we already dealt with our pocket here of that significant price movement. In my opinion, this is a little unclear of what it wants to do. It's deciding. There's a lot of business being done here in the 80s. How are we doing? Are we sitting on our hands? Are we able to take a little bit of money out of the market today? What's going on? I don't think there was news today, was there? The orange folder? Barcodes in the 15 are always quite fun. V. Oh, yeah. No, that was orange folder, man. You're more concerned with the reds. The reds, you see a lot of volatility. The orange, sometimes. In recent orange folders, there's actually been some violent movements that have occurred because of it. But in general, we're not expecting a lot from them. Made in Asia. Love it. And 10 trades, London. Yeah, London looked lovely. Couple of nice uptrends. Really? It's showing building permits as red? That's wild. You sure you're not looking at the retail from Great Britain? So what you'll find is that these movements, nothing I was involved in, I need something taken, and I wouldn't expect that one. Right, I'm expecting with a body closure underneath this leg here. I would be looking for that being the liquidity spot. Coming up for this high, but people that are longing anywhere inside of this, they'll look to take profits in the middle of this range. Or they're aggressively following their lower time frame lows up. So this one, their stop's now here. And if they catch the parabolic move, cool. But the problem with trailing this is you're expecting a parabolic move. And today has been anything but. Bless me. Again, strong area of interest. Right? Uptrend. Spiked into here. This was the area where we traded higher and then dropped down. But not really interested in any trades in here. Still think this low is tentatively weak, but very unclear. So I'm risk off. They're trying to lull us to sleep before some massive movement comes, probably at 11 o'clock. Wild. We got to do these on like NFP day or something for the community. We're ready to go. Oh my goodness. Scalper's paradise. Does this feel like Asia session to anybody else? Horrific. Horrific for any good trades. We're waiting for price action to do something. Can you talk about fibs and the swing anchors to use? Bat yesterday was using some really interesting anchors, and I've never seen it done like that. Yeah, so Bats is an ICT charter member from back in the day. And he looks at a whole bunch of other stuff that isn't sort of bullpen. Now, I think he's a phenomenal trader. Let me just preface that, right? That's not knocking anything that he uses. I think that his ability to catch swings is phenomenal. What I like to do is I like to have confluence of areas that are responsible for large market decision making and pair them with a retracement. So you'll very rarely, if ever, see me long continuation. Right? I'm not knocking that as a strategy. I think that people made money trading body closures here for the movement back up after you're seeing confirmation, right? They longed here, they longed here, they shorted there, all of which made money. Cool. That's not my strategy. I look for what's the market doing, what's its trend, right? So for me, one of my trades was a long in here, right? As you guys know, I longed in here. I went long in here. Those are my 3 trades today. Actually, no, that's not true. I took another one in here. Or not there. Duh. My long was in here. But I need something taken in failure, right? So essentially what I do is I form narrative based off of what the short term and the longer term trends doing, right? For example, I'm noticing that this is a lower time frame trend. That's my structure. My narrative is that this high is now weak because we've got structure forming that's leading to an uptrend. I'm expecting this to lead to rejection, but the only possible area of interest after we've tapped into here, we're not failing, is this high, which I would implore on you guys, right? For your growth, you're looking at whereabouts the market should trade to, what it's doing, and why. Right? For example, failing here, when do you know that we're taking this high? What's this low's objective? It's to trade back into this area. We did that. We traded back down. Right? We couldn't go lower. So now where are we going? We're going up to this area. Cool, we did that. We couldn't go back down. So now where are we heading to, right? We took this liquidity, we're kind of ranging, the expectation would be this high now at 506. So what I do is I look at whereabouts the trend is, right? You could argue after this movement that the trend might have flipped at least lower time frame bearish or a range. So now I'm looking at the area that's responsible for that, which is this here, and I'm looking at a retracement back into it. So there's two ways of trading that. You can either look for the long to trade into it off of failure, cool, or you can wait for a short out of it if you're expecting lower prices. But what you'll find is that you'll find the retracements from areas of significant price movement. You'll find them to be very accurate in terms of the retracement, back to either the midpoint of the prior zone or the pocket of it. So for example, you've got this strong movement. Now again, my narrative, should this fail, I'm not looking for a retracement to go lower because my trend is still up, right? But even then, you probably saw a reaction out of the pocket of this strong directional leg. In fact, you saw this one trade in. That might have been good for 10, 20 points, whatever that is, 15. And then the same sort of thing here. You got some failure. Trade it back down. Right? But use where large price movement was. And you'll find that when your narrative's clear and you've got some significant movement like that, that you'll find some really, really strong trades. For example, yesterday afternoon, that short that we grabbed, where was that now? Yeah, it wasn't there. What am I talking about? Right? So you have that high that was formed at 9:53 in the morning. We snapped it. Where's the area responsible for breaking that high? It's here. That's your SNDR. That SNDR was liquidated. Cool. So now what are we expecting? We're expecting a trade back in to go short. Now, when you're short, you've got a lower time frame order flow, similar to today. You would expect this low to be weak, right? We're now bearish. We were bearish from the day. That's pretty obvious. Cool. Right? So taking this short in here, and those that are in the room saw me take this short, we got this lethargic movement in here. Is that what we want to see? Or do we want to see this? When we're expecting of being on the right side of the higher time frame, we want to see this. So we're out. We're not giving this the room to consolidate and come back up because we're expecting it to come back up given the lethargic movement away from it. But whereabouts are we looking? Where's our strong directional push, right? You've got this high here. Lo and behold. Right? So you got your narrative and structure aligned that you want to trade lower. Now you got your area of interest to short from. Take your shot. Right? It's actually still lining up well. They're still selling from there. Isn't that funny? Random. Random. Mm-mm-mm-mm. 8 minutes. 8 minutes of the most boring PA that we've had in the last 3 weeks. I think this is worse than FOMC. Pre-FOMC. There's more life in a funeral home. My goodness. This is brutal. Is he gonna catch everybody off guard and just knife through? Look at that. Look at that. Now, I don't really trust it, but you would expect people to buy underneath those lows. Those are good for scalps when you're expecting the range to continue. Whoop. Do we have any fun on the seconds time frames here? Break and order flow, trade back in. I suppose that would have been beautiful. Actually, quite a few of those today, isn't there? Yeah. Break, trade back in, gone. Trade back in, gone. Failed, trade back in, gone. Yeah, I suppose there's quite a few 15-second plays today, wasn't there? Nice close above, but I don't trust this. This is very different for me. Right, we're seeing bear bar, bull bar, bear bar. Right, at least a large wick of buying before continuation. Right, I think this is looking to expand at least. It might take this low. We'll see. But what's more likely is that we're changing personality, and I'd actually be concerned about this low of day at 33. Not short. I'm not short. Just FYI, but you learn how to stay out of trouble when you're long, and I need a little bit more than this. Right back down to this area of interest. Love it. Right? But the reaction from taking that low, trading back in, and then continuing lower, just a word of caution. You got 4 minutes for the turn of the hour. Be interesting if we run this and then run it. But the move of the day seems to be happening around 11 a.m. typically. Right? This looks like it happened just before the 10-minute window. Right, so if this is higher time frame delivery, ideally we don't get a body closure above this at 66. All right, and that failure gives you scalpers at least something to risk off of. Ooh, gonna do it. It did it. Good lads. Good lads. I'll give you a swing back into here, even if we do continue lower. I think this would be very aggressive of a target, but possible. The reason I'm looking at this and not this or this is because this was where the significant price movement came from. Really getting held up at that SNDR area there. Or lower time frame fractal, I should say, which coincides with about the midpoint of this larger one. That low put in this high that really started unwinding. Ooh, I don't think that swept. No, tweezers. Right back down to here. If we're going to bounce, this is the area, but again, not what I'm looking for longs. This is me staying out of trouble. 55 seconds. Now what do we get? Had this have traded higher and then traded through, that would have been my short there, with the expectation of trading lower, probably below that low, and then by extension this one. I wouldn't want to see major failure underneath here from the bearish side. I think that would be very dangerous inside of this area that's been responsible for driving price higher today. And I think if it does that, then it probably runs all of these up to this area. Nothing doing long. I do like that it closed underneath or above here, I should say. Right? But I'm being very cautious of what this is doing. You have your new hourly open now. This looks kind of brutal. Shocker that the 15-minute looks brutal as well. I think that just swept it there. It did by a tick. Right. This has the potential of running similar to what we were looking at here with the personality change. We now have a personality change here. If this cannot fail, and I'm talking like fail here to then fail here, that would really spike it higher. I don't like this in terms of a bottom on here, although, well, no, even on the 5-minute, that's not great. Right, we're seeing a strong movement, but she needs to continue. I'd be cautious of a major failure in here. That might have been it there. We'll see. You got an imbalance here to risk off of, however. Yeah, this PA is just putting me to sleep. Yeah, trading above this high, if we see a reaction from this and failure above that, I think that would lead you back down to these 60s. Just don't front run this stuff. Right? You're looking for that to trade underneath here pretty quickly. You want this to be finished business and gone now. Right? Otherwise, you're pretty much break even if you took that aggressive trade. If you're still sitting on your hands, essentially you're looking for an attempt to rally, which then fails. And your risk is tight. That's mitigated now. Ooh. Doesn't look like it, at least yet. If you're looking for a conservative trade, you want that change in order flow, which we haven't gotten yet, right? So your two options were aggressive shorting, and then you're expecting a trade below here. Didn't get that, so you're flat. Or you've got your change in order flow, trades back into the prior zone. Now you've got something to risk off of for that narrative change. Right? Yes, we closed above here. That wouldn't have been something I wanted long, even on the retest. Challenging PA, right? Just make sure you guys are trading safe. This would be the area that I'd be looking short, but it doesn't look like it is giving exactly what I want. It's getting held up in this area, which I do like. So aggressively trading with a stop, but we need some follow through now. Right, and you're looking for a trade back down probably to here, 73 and then 69. Right, now finally into that imbalance. So good for 10 to 15 points maybe, but this could be just going down to go higher now. Okay, I got to run the little one to school. I'll be back in about a half an hour and we can hop on and do some more fun. Hopefully you guys stayed safe at the very least. This PA was slow. I'll chat with you guys really soon.